Target stock and Disney stock, they are two of the most asked questions I get out there. Are those stocks buys right now? Or they stay away from right now? These stocks have been absolutely getting pummeled recently, okay? This is just the past month in regards to these stocks. Target is down about 17% in the past 1 month. Disney's down over 13% in that past month, while the S&P 500's up 1%. The Nasdaq's up 7%. Stocks like Nvidia are up 40%. Stocks like Palantir are up 88% in the past 18 months. Disney stock is down 47%. Target stock is down nearly 50%. And so people are looking at these stocks and they're saying, are these great buying opportunities? They've both been caught into controversies recently, specifically over the last number of months here. We'll talk about that. We got to discuss that at the top because I know that's what everybody is focused on at the moment. We're going to get into the financials of these. We're going to get into the valuations of these. And I want to give you my perspective on if these stocks are easy money, if they are okay money, or if there is actually a huge risk here in investing in these and you're likely to lose money over the next few years. So I hope you guys enjoy this. Thanks for being subscribed. Thanks for being here as always, folks. These are two very different stocks, and obviously we usually talk about on the channel. So I'm really looking forward to diving into this one with you guys. I appreciate you being subscribed and enjoying a video like this. And thanks for everybody that suggested to take a look at these two stocks. Because like I said, Disney and Target stocks, these are the stocks that are usually talked about on this channel. So I do appreciate y'all as always. Also, if you are looking to apply for my private group, I invite you to apply. That will be the pinned comment down there. Okay. Alrighty, guys. So these two are in controversies right now, okay? Big controversies. Disney versus DeSantis, Target, Pride stuff. If you want to look up all the details in relation to those two situations, you can go into that, okay? I don't have 3 hours to go into all the details and what TikTok videos are fabricated and people place certain items in certain areas and what's truth on the DeSantis side versus Disney side. I don't have time to go into all that. Plus, you get political, and certain people are only going to look at this certain ways, okay, depending upon which side of the aisle you're on, okay? But it's gotten political, okay? And so if you want to go ahead and dive into all the little minute details of that, go right ahead, okay? And you can go down that rabbit hole, have fun the next 3 hours diving into all that, okay? But nonetheless, they're both in a controversy right now, okay? Now, in regards to both these situations, a lot of people are wondering, is this like the Bud Light situation, okay? What I can tell you about this Disney and Target situation, absolutely not. Okay, this is not Bud Light situation. Okay, the Bud Light situation was a complete disaster, and that's on a whole different level of a mistake in terms of what happened there. Okay, in terms of how much that hurt the stock price, sales of Bud Light. I mean, from what I've seen, they've almost been given Bud Light for free at some stores where basically you pay, but then you send in like this manufacturer rebate to basically get almost your entire purchase price back, essentially. So it's absolutely insane, okay, in regards to that. So in my opinion, this is a totally different situation than Bud Light in regards to both these situations. That was much more in terms of the customer base. They made that customer base a whole lot more mad than Disney or this Target situation. That's a whole other level out there, okay? Now, also the important thing to remember about these sorts of situations is they come and go, okay? And in this day and age, it's one thing after another, and pretty soon everybody's going to be boycotted, and every company in the world is going to be boycotted. Maybe we can finally get that recession everybody's been, talking about for the last 10 years now at this point in time, right? I mean, if we can't shop anywhere, I mean, gosh, okay? I don't know if you guys saw this, Chick-fil-A's. I guess they hired some diversity, equity, and inclusion, and now people are wanting to boycott Chick-fil-A because they hired somebody that, oh gosh, man, it's exhausting. It's absolutely exhausting. I mean, I can't keep track of all the companies. The liberals and the conservatives all cancel now. Like literally, it's impossible, okay? And just a few months ago, Walgreens was canceled. I don't even remember what happened with Walgreens. Like they were canceled. They were trending on Twitter for several days. I think they made both sides mad because they offered something, then they didn't offer it again. Holy smokes, it's no joke, okay? No, did this even affect Walgreens' numbers? Actually, Walgreens grew revenue on a year-over-year basis, which was pretty shocking considering the previous year they had been obviously doing a ton of sales of tests and, the pokey things, okay? And so I was actually amazed that their numbers weren't impacted. And in terms of going forward, the company just reaffirmed their full-year earnings guidance. So all that talk, all that trending on Twitter, all those people mad at Walgreens, boycott Walgreens, and it looks like it's not going to affect sales whatsoever. Company reaffirmed full year guidance. Like, but you got to go off of when it comes to that, okay? So do take these things with a grain of salt in regards, I mean, at the end of the day, you know, there's some people mad, maybe there's some people happy. At the end of the day, guess what? It's massive free advertising. Like no one ever talks about Walgreens or Target, and all of a sudden it goes viral and everybody's talking about it. It gets on top of people's minds. So you would even look at it as a negative, like, oh, maybe some customers are going to be really mad. They're gonna boycott. They're not going to go to the store. And you could also say, well, maybe a lot more people go to the store because it's top of mind and it's being advertised like insane, like in a viral trend that they didn't even have to pay for. You know what I mean? Like everybody's just talking about it, and that's the type of thing, right? Now, in terms of stock price, it can definitely hurt your stock price, okay? It might not affect your actual revenues and your profitability unless you're Bud Light. That's a whole different situation, right? But in terms of stock prices, no doubt it has affected Walgreens stock price, okay? Walgreens stock price entering the year was around $37. Now it's $30, okay? Now, you know, it's a great buy. It's an easy buy, 6% plus dividend yield, but there's no doubt the stock price has been affected, in my opinion, at least in some capacity due to that. Also, the other thing that's impacted Walgreens stock price is just the fact that you can get 5% on Treasury. So a lot of people say, why do I need to own Walgreens stock to get 6% dividend yield when I could just buy a Treasury? It seems risk-free, right? So anyways, okay. Now, I went to Target store, okay, because I was interested. I was like, let me just go on a Thursday afternoon, around noontime or so, and just see, is Target dead? Is there any noticeable impact to business, okay? And here's what happened in regards to this, okay? I went to Target, and I had to park way behind a lot of people, as always, okay? I could notice I've been at Target 30, 40 times in my life, maybe more, okay? I could tell you I noticed no difference in the amount of cars parked on a Thursday afternoon than any other time, okay? So take it for what it is. You know, who knows? Maybe it affects Target's business a little bit. All I'm telling you is I drove to my local Target, and it wasn't like I could say it was busier or less busy than it ever is on a, you still got to park way dang far away. That's all I know about that, okay? Now, in regards to Target, valuation-wise, okay, here's what we're looking at. Now, they're already in their fiscal 2024, just so people are aware, okay? Stock's trading at about a 15 to 16 range forward P for this year's numbers. Next year's numbers for fiscal year 2025, right? They're trading at about a 12 to 13 range forward P. Now, you got to ask yourself, is that really high? Well, who's Target's most direct competitor? The most direct competitor to Target is a company named, let me guess, come on, Walmart. Thank you very much, okay? Walmart. So in regards to Walmart trades at about a 23, 24 this year's, fiscal 2024 numbers, and then a 21-ish next year, right? Now, that's intriguing because here's a situation where Target's trading at a far cheaper valuation, just far cheaper, but is actually expected to have better growth going forward than a company like Walmart. So if you were just looking at it on a valuation basis, there's no doubt like Target's a great opportunity right now, like a great opportunity and a much superior opportunity than something like Walmart. But we also got to think about the business, okay? Now, as somebody that came from retail, studied retail for a million years, okay, I can tell you with the in-store experience, Target is absolutely destroying Walmart, and it's not even close in terms of in-store experience. The Target experience they're the most well-run retailer, in my opinion, with in-store experience probably in the world right now. Basically, now they're actually doing a lot of their stores with Ulta stores inside the Target stores, okay? And, beautiful Starbucks locations in many of these Targets now at this point in time. The whole design is definitely a level up, probably a few levels up from Walmart. I mean, if I go to a Walmart, it's still the same experience that I remember when I was a kid going to Walmart. Target's evolved in a massive way over the years, and they've done phenomenal. So the in-store experience, Target's destroying Walmart. Now, in terms of store pickup and shipping to your house, I can't say one's really better than the other. My wife sometimes orders from both. She orders more from Target in terms of store pickup and in terms of online stuff. I can't really say like, oh, Target's better than Walmart or Walmart's better than Target. It all is what it is. At the end of the day, Amazon kicks both their butts in terms of, getting something to your house as fast as possible and with inventory and many times even with pricing, okay? So that's that as far as the business overall. Now, in regards to Target, they could have a better balance sheet. They have about $1.3 billion in cash and cash equivalents. Their total equity on this company is about $11 billion. Their balance sheet's okay. That's the way I would describe it, okay? But at the end of the day, is Target a money maker stock, right? Here's what I'll say about it. It's a simple, easy buy the next 6 months, okay? Do not expect insane returns from the stock. Like, this is no Palantir, this is no Nvidia, this is no Tesla stock, okay? This is none of those. But with that being said, I think it's pretty dang easy money for the next several years. And this is one of those stocks like you can look to just add for the next 6 months, throw it in the filing cabinet, forget about it. The dividend yield's great on this company, 3% plus yield, and it's an easy money buy. I really like it a lot. Like I said, don't expect like, oh, I'm going to quadruple my money over the next 5 years. It's not that sort of company, okay? But can you potentially double your money between what the share price can gain and what you'll get in dividends over the next 5 years? I wouldn't be surprised at all, okay? Alrighty, that covers Target. Let's get into Disney now at this point in time, okay? So first thing you got to understand about Disney, Bob Iger. Bob Iger, okay? Remember that name. This man is back leading Disney once again. Now, he did phenomenal leading this company in the past. You know, the stock was up something like almost 400% while he was CEO of this company from about 2005 through about 2019, roughly, okay? Stock price he kicked the market's butt. This is Disney's stock price from the time he took over the company through, you know, the time he left the company, and he killed it, man. He destroyed the S&P 500. It wasn't even close. And so, you know, if you would put your money in Disney stock during that time period rather than in the S&P 500, you made a lot more money, and I mean a lot more money than just having your money in an S&P 500 index fund or something like that, right? So the man has a proven track record. Now, the interesting thing is, if you look back at some of his past deals over the years, I will say he got more questionable as time went on, which brings to the point of like, is he still on top of his game? Pixar, brilliant deal. They did in 06. Marvel, obviously, that deal smashed it for them. Like, Marvel, a game changer for the company, and they paid $4 billion in 2009 for that franchise. Like, oh my gosh. Talk about knocking out of the ballpark. That's one of the best acquisitions probably in history. I mean, literally in history. Like, I would put that one up there with Facebook buying Instagram. I would put that one up there with Google buying YouTube. Not quite as good as those, but dang, that's got to be a number 3 there. That is very brilliant, okay? I mean, absolutely incredible. Then they bought Lucasfilm. I think that's another smasher for $4 billion in 2012. Another great decision by them. Then I think Bob Iger made a couple questionable decisions. In 2019, he bought Fox Entertainment assets for $71 billion, billion dollars. I think that was a questionable buy there. And paid $27 billion plus for Hulu. I don't think those were good decisions, okay? I think these were smashing out of the ballpark, and I think these were questionable, if not bad acquisitions in regards to that, okay? So I think that leaves some element of like, you can't just say Bob Iger come back is necessarily a slam dunk for the company, because at the end of the day, a lot of people want to put Disney's kind of failure over the past few years, they want to put it all on Bob Chapek, okay? And I'm just here to tell you that, to be quite frank, I think Bob Iger deserves just as much blame, even though he wasn't CEO, because at the end of the day, he made those questionable acquisitions and spent, $100 billion roughly on some deals there that I'm like, I don't know about those, okay? Those are very questionable, and I don't know if they're ever going to get those sorts of paybacks, in my personal opinion, okay? Now, also, Bob Iger's come back and, he's got a big stick, okay? And he's firing people left and right. 7,000 employees have been fired from the company so far, maybe more. We'll see what happens here in regards to this, okay? Now, I got to say this, okay? I was just looking at their earnings presentation. I don't think I've ever gotten freaking goosebumps from looking at an earnings presentation. I just pulled this open. I got goosebumps just looking at this imagery of this mermaid, and she's just looking up at the water, and just, oh man, it's so beautiful. It's just so beautiful. That's Disney. That's what they call the magic of Disney. They make you feel things that, you just wouldn't otherwise do it. It's just absolutely incredible company, right? Now, in terms of their latest quarter here, revenues grew very nicely from 19.2 billion year over year, 21.8, and it's a much tougher environment to grow revenues. Apple just shrunk revenues in their last quarter? So when Apple's revenues are going down, they're expected to go down next quarter as well. Don't be surprised if they go down more than analysts expect. When companies' revenues are going down, like Apple, when Disney's posting several billion dollars of revenue up year over year, that's impressive. If you look at income from continuing operations before income taxes, grew about $1 billion on a year over year basis. Now, total segment operating income was down a bit from $3.7 billion to $3.3 billion. Diluted EPS from continuing operations, that's important, went from 26 cents to 69 cents. Diluted EPS excluding certain items went down from $1.08 to 93 cents. So I would call their numbers kind of a little bit of a mixed bag right now. I think they're going to clear up and become better and better over the next several quarters, and it's going to become more clear where this company's headed. But right now it's called a little bit of a mixed bag, right? Now, obviously they have Disney Plus, they have Hulu, and they have ESPN Plus. I think ESPN Plus is definitely an area they can grow substantially over this next few years, okay? And I saw something brilliant they did recently. There was a big boxing match here in Vegas, okay? It's between this man, Devin Haney, and Lomachenko, okay? And this fight, basically, in order to get the fight, you had to get ESPN plus you had to buy the pay-per-view. Now, I actually thought that was a brilliant idea because it's going to force a ton of people to get ESPN Plus, right? And so I wouldn't be surprised if they continue down this rank, and I wouldn't be surprised if you see in their next quarter ESPN Plus subscribers go up quite substantially than what it was, in part because of this fight at the end of the day, right? Now, there's something interesting I came across a couple days ago, and Mayweather is somebody I've followed since I was a kid, to be honest, okay? And I saw this training video from him a couple days ago. Dude was training hard. And with how hard I saw him train, I hadn't seen him train that hard probably since he fought Pacquiao. And I'm like, what is he fighting? What is he training that hard for? The guy's 46 years old. Like, the only thing I could think is maybe he's planning on a comeback. And if he's planning on a comeback, I think there would be two bidders in the market for him. One, Showtime, for like a 4-fight deal, 3 to 6 fight deal, maybe 4 fights. Or the other would be ESPN Plus. And I think this could be a huge boost. If they got Mayweather to come back, Mayweather would probably make a couple $100 million off this, right? And I think this would be insane for ESPN Plus. If they had his fights where you had to get ESPN Plus to even see the fight, be massive. They could put some huge fights together. And, you might say, didn't Mayweather make enough in his career already? I'll tell you this about Mayweather, okay? Man's got expensive taste, and man likes to gamble. I've seen him on the strip before, okay? Man likes to gamble. And that money, you make a lot of money as a boxer. I can tell you run through it when you're gambling and spending on all these fancy cars and stuff like that. Let's just put it that way, okay? So, I don't know. Maybe it's something there, okay? But nonetheless, I think ESPN Plus has some pretty big opportunities there. Now, in terms of their parks business, this is another huge component of their business, right? It's growing great. Revenue's up about 17% on a year-over-year basis. Operating income up 23% on a year-over-year basis. Their parks business is smashing it always, right? And especially in this time period, coming off of Rona, people want to go back and travel. Those parks just continue to do well, and they're going to do well, as far out as I can see. You can't duplicate what Disney's put together there. That's the bottom line. You can't duplicate that. You don't have the characters to make the kids care about the parks and the parents care about the parks. You can't duplicate that. The money it takes to do that, it's impossible, right? And so those parks are going to do well for basically as ever and ever, right? Now, if you look at the company's balance sheet, something a little iffy here, okay? A little iffy. So when you look at total equity, it looks great, right? Wow, $110 billion of total equity on the company. Wow, that's tremendous. But let me show you something, okay? Let me show you something very important. See this right here? This is goodwill. Goodwill, they have that listed almost $78 billion of goodwill, okay? So the bottom line is this total equity number is boosted up in an epic way because of goodwill. Now, I do believe the company has a tremendous amount of goodwill. I mean, at the end of the day, when you own brands like Marvel and you own all those Disney characters, right? And you own Lucasfilms and you own all these tremendous franchises, Pixar and everything that they own, right? And you got ESPN. They truly do have a crazy amount of goodwill. But I just think it's worth mentioning that if you took that goodwill away, that balance sheet's not looking nearly as healthy, okay? And part of that is because Bob Iger did so many big deals and took on a lot of debt over time. So do keep that in mind, okay? Now, in my opinion, is Disney a great buy, okay? I think it's an okay buy. The forward P on the stock's about 21. As far as next year's number, about 16. I wouldn't expect an insane return. I think it's an okay buy. okay buy for Disney, in my personal opinion. In terms of what stocks I'm buying, make sure you check out the 7 Stocks I'm Buying Now edition, June 2023. I released that yesterday. Appreciate everybody joining me as always. If you're looking to join my Patreon, check out the pinned comment down there to join us in there. Right now, if you join, it's $19 a month. I will be going up on future members here shortly, and we'll probably move that tier to 25. But if you're already grandfathered in, you'll just be at 19. So you get to see the moves I'm making in the market, plus be part of that Discord chat. Much love as always, and have a great day.